What is up, money bros? Today I want to talk about stonks, or rather stocks, and day trading versus holding and buying for the long term. So, this last year has been an amazing ride for many in the stock market. It has also been a time when a lot of people have lost a lot of money. And what I want to talk about, or let's discuss, let us discuss Tesla. I mean, what else is there? The stock market is now Tesla, okay? It is the major holding for my investments as I've gotten into stocks. If you look at the S&P 500, there are less than 10 companies that make up for 25% of its profits, and those are the big tech names everybody's familiar with. Google, Amazon, Facebook, and now Tesla. Because Tesla has been added to, or it's announced that it'll be added to the inclusion of the S&P 500 in the coming weeks. I think December 21st is the day that it will be included. So that has caused the stock price of Tesla to skyrocket near 600 today, and it's an all-time high. But it's also been very volatile. It has been a really good lesson to me because when I got into stock trading this last spring, when the whole COVID and the market crash happened, I said, okay, there are opportunities here to buy. Before that, I'm going to be honest, I'm new to stock investing as far as individually picking stocks. Before, I've just kept it in index funds because I was busy with my businesses and didn't have time to follow up on investing. So I chose to kind of outsource that, and that's what index funds are. You usually get a decent return, and it's out of sight and out of mind, and they're part of my retirement account. So I wasn't focused on that until the market crashed, and I looked up my holdings, these index funds, and my account had tanked. I lost 20 to 30%. It's since recovered, but at the time I thought, okay, what's happened here, and could I have done something to prevent this? And I realized I needed to be more proactive to know about stocks in general and what my goal is. So I immediately opened up an account on Robinhood and Webull. I love those, and found that I knew historically, like when the market crashes, it eventually rebounds. Not always, there's no guarantee in any of this, but I figured now would be a good time when you can buy cheap and go for the companies that you believe in, they're going to come back. But my mindset was pretty limited this time, and so I just bought a few stocks to get my feet wet, and I started with Delta. And boy, that was a good lesson for me because I bought it at the top. It was one of those days where it was shooting back up because Delta got hit. I mean, all the airlines, the travel industry just got massacred, and they're still not recovered from this. But that day it was on our upswing. So I thought, oh, I'll jump in, and I bought it at 30, 31, 32, and 35 even. And then it peaked, and it just immediately dropped back down. And I tell you what, that was really good for me because I only put in like $1,000 of stocks here. But that $1,000 really left me unsettled when the value dropped 200. What I realized was it took up a lot of my mental power process thinking about this stupid stock. That wasn't a huge amount of money. I just hated losing money. And at the same time, when I was focused on what we now term as recovery stocks, those got hit and that will come back eventually, we believe, I could have been focusing on stocks that were taking off, like Tesla. I mean, Zoom, that was kind of that obvious one that everybody jumped on, but the company that I was most familiar with was Tesla, and that's where I should have been focusing. I did jump in at 550. I only bought two stocks, and then it dropped down to 450, and I thought, what am I doing? But it was a really good lesson, and I think that's why I want to talk to you guys about today is what are your experiences in the stock market in the last 6 months? Have you jumped in? Have you lost money? Have you made big money? I'm seeing guys that are just killing it. They had money before, right? You can't just jump in the stock market and go from 10,000 to a million. There's a lot of dudes claiming that. I would be suspect of any of them. There are a few that could make this possible, but there are also lottery winners out there. So it's important that you look for the right guidance and start learning about yourself in the stock market. What I found for me is that I have to buy a company like Tesla, and I had to change my mindset and think, if I'm willing to invest in Tesla, I'm willing to ride it out for a number of years, because if I don't, it's going to take away all of my peace, and it's going to distract me from my other businesses and the other ways I'm growing money right now. I look at the future and I think Tesla is dominating in innovation, and everybody always keeps talking about the Tesla killer. Oh, the media and other big time Wall Street investors and bankers, they talk about the incumbents like Ford, GM, Volkswagen, etc., that they're any day now they're going to come out with a real competitor for Tesla. But I just don't see it, because these companies, their business model depends on combustible engines, right? And for them to make the transition is 1,000 times harder than Tesla, because Tesla doesn't have any of that legacy network and legacy costs and investments. Tesla only has investments in the future. Ford, GM has investments in the past and the present, and they're starting to invest in the future, but it is looking pretty stark. And I look at that and think, okay, how are they going to compete? How are they even going to survive? Did you know that Ford and GM have over $150 billion in debt, each of them? And when Wall Street short sellers, they talk about, Tesla shorts talk about Tesla not being a profit, I look at the other companies and think, well, if they're pulling in profits, they're paying billions in debt every year. And that doesn't seem sustainable to me in a lot of ways, especially with this pandemic. It is going to disrupt the whole market. We're going to see the fallout of this over the next few years. We went through it in the 2008 with the housing bubble, and this is going to be, I think this is going to be a lot bigger. It just depends when it's going to start dropping and when things are going to hit. But our focus at Money Bros is to help each one of us get through this and come out on top, and where we can be proactive, because nobody else is going to take care of you. If you haven't figured that out by now, well, here's a wake-up call. Nobody's going to come save you. And if you really want to be successful in life, you need to be proactive for yourself and seek out knowledge of those who have it and gone through and have better ideas than yourself. And so surround yourself with people who have the knowledge and have proven track records, right, of success. And when I say proven track records, it's that not that they never failed. Everybody fails in one way or the other. But over time, have they consistently grown and shown returns, right? So when I look back at the stock market, when I look back at Tesla and my own investing, I realize, like, it's so funny. Our minds, our brains, how we think, it can get us in so much trouble. You invest in a stock, it goes hot, and you think, okay, you invest in 1 or 2, 3 companies, right? And you're just killing it, and you think, oh, I figured out the secret. This isn't very hard. And then you lose any of that caution or hesitancy to really go big, and you end up going big, and then your stocks get hit hard, right? So you're in the red, and then what do? You think, oh, I got to sell it, because what if the stock goes down and I lose money and I don't recover, right? Well, that's the number one way of losing money. The second way is to buy a crappy company and ride it down to the bottom. So it's a number of things. You have to believe in the companies you're investing in. And when I say believe, it's important that you know what they actually do and why they are going to succeed in the future. And some of those are obvious and some of them are not. I'm looking to see, it's like choose the winning companies. You don't need to diversify in 100 or 200 companies. If you want to do that, just buy the index fund, S&P 500, or similar funds to that that resemble the S&P 500 and stay there. But if you want to invest individually in companies, try not to invest in too many of them. I just think that it works better to choose the companies that you really research, that you really are familiar with, and are willing to stand by through the thick and thin, because there's going to be thick and there's going to be thin, with whichever company you go with. But choose the winners and just go out there, start studying, get into it small, and don't risk money that you can't afford to lose. And that is our Money Bros tip for today.